Hello everyone, it's Dave Rosenthal here with Judge Accountants, and I'm joined today with Matthew Corry from Clarity Wealth. How you doing, Matt?
I'm good, Dave. How are you?
I'm doing well. Today we've got a special video update, just a quick recap of the 2022 budget. Now, last night, obviously, we had the 2022 budget. It was sort of delivered. Much anticipation is that the election is going to be called very shortly, either this weekend or maybe the next weekend. And Matt, what were your thoughts on the budget?
Dave, I think it was a pretty kind of traditional election year budget, nothing too major, and obviously some very much geared towards some treats in there for the voters when they come to the ballot box in the next couple of months.
I definitely agree with that as well. There wasn't that many sort of big measures for businesses, but yes, there was some sweeteners for individuals. But we wanted to talk about some of the measures that were announced, and we can sort of roll from there.
Absolutely.
All right, so let's start off. One of the big things is obviously, first off, for personal income tax changes, is the increase to the low and middle income tax offset. In policy circles, it is known as the Lamington, and basically this is the extra $1,000 everyone gets in their tax return every year. So this was originally brought in part of the big tax plan, tax cuts, which were introduced 3 years ago, and it's been carrying on basically during COVID. It was supposed to obviously be repealed a couple of years ago. It kept going, and they've actually increased it as a one-off. Previously, it was $1,080 for people earning under for people earning under $90,000. And it's actually been increased up to $1,500 as a one-off payment to help for cost of living pressures. And then what should happen is it should actually come off. The low to middle income tax offset will be repealed fully in the 2023 year. Now, for everyone, just remember this actually comes off in your tax return, so you won't actually see it until you lodge your tax return either in July or after 30 June 2020.
Yeah, there's nothing really major, I suppose, in that space. It was, I suppose, in terms of surprises. It was surprising. There was questions as to whether this was going to be extended, which it has been.
Yep.
And then obviously the biggest surprise was obviously that additional $420 that's expected to be received. But as David mentioned, we'd probably expect that to roll off in the next financial year with a first year government, whatever it might be, will be happy to withdraw that or repeal it, really.
Well, it could continue on. Basically, they've sort of just effectively kicked it to after the election and sort of let whoever is in next year deal with that. Moving on, we've got tax deductibility of COVID-19 test expenses. So basically, if you're required to take a rapid antigen test and in order to work, those costs will be tax deductible. So you will be able to claim a tax deduction for those expenses, which is a healthy amount because obviously we all know the cost of getting a rat. They can add up over time. So it's an extra little benefit to claim a tax deduction for those.
Yep, that's all pretty straightforward.
Yeah.
That one, yep.
Next one, we've got the cost of living payment. So this is, once again, in regards to dealing with cost of living pressures. It's a one-off payment of $250 to people on pensions and concession payments from the government, including the disability support pension, parenting payments, job seeker, youth allowance, and any sort of special benefits. This will be a one-off payment which will be paid, basically it should be in April, so that will be an extra little sweetener right before election time.
Yep, again, one of those ones pretty straightforward, David. If you're obviously in receipt of some of these payments, there's nothing that you'll need to do or action. It will automatically flow into your account, similar to the payments that were received previously through COVID. The next area is obviously the one that's had a lot of media coverage, is a temporary reduction of fuel excise. Obviously, this kicked in as of today.
Yeah, I was excited. I saw fuel at $1.94 today, so I was already ready to fill up. So,
well, funnily enough, I'm not sure. I couldn't tell if it was $1.94 because of the cycle of petrol, of whether they've actually applied the discount or not, which I think is going to be a bit of the theme going forward. But interestingly, I suppose it's obviously a lot of talk around this flowing through into the Bowser and assisting people directly, but really I suppose what they're hoping to do is assist indirectly. So obviously when you go to go to a shopping centre, pick up produce, things that require logistics and things that are required to be delivered on a very large scale, we're hoping obviously that flows through to parts of the economy and decrease input costs for a lot of businesses, which we would hope that they subsequently pass on to the consumer. But whether that happens, we'll have to see.
It's a 6-month measure, so we'll see what happens over the coming months. Whether we'll see prices going back to a healthy maybe $1.50 or getting back down. Let's hope so.
Yeah.
Moving on from there, we've got the expansion of the home guarantee scheme. Now this was introduced last year, and basically the home guarantee scheme is for first home buyers. Basically the government will help support them to help buy a house with up to a 5% deposit. Normally for home buyers, if you have a 5% deposit, you generally have to pay what's called
lender's mortgage
insurance, which can sometimes add an extra 20 to 30 grand on a loan. This scheme basically allows the government to go guarantor on that loan to help support them and not have to pay the lender's mortgage insurance. Previously, there was only 10,000 places a year for this. It's actually now expanded up to 35,000 places a year for first home buyers. So this is basically for individuals with a taxable income of up to 125,000, or for couples with a taxable income of under 200 grand.
Yeah. Really popular scheme. Obviously, why the government's extended it to more places. Housing affordability will continue to be an issue. So this is a scheme that initially when it came out, given the subscription of how many people subscribed, it was no surprise that this was extended or expanded, and we'd probably expect this to, I think, be a pretty consistent policy going forward for most governments now. As part of an initiative, I probably wouldn't expect this to get rolled back at any point.
No, I expect this is probably going to get expanded and probably be baked into
part and parcel of budgets going forward. Yeah,
exactly. Now the next thing which was a nice surprise was an enhancement of the paid parental leave scheme. For those who don't know, paid parental leave is 18 weeks at the minimum wage, which right now works out to be about $630 a week or so after tax. And basically there's 2 parental leave schemes currently. There's for the primary carer, there's the major parental leave scheme, and then there's also dad and partner pay, which is normally for fathers. It's only 2 weeks at the minimum wage. What they've done is they've actually merged both the schemes together to be one whole scheme of 20 weeks, which can be taken and broken up how you see fit. That way you can basically, this allows for people to juggle between parenting responsibilities and also offer some flexibility depending on who the primary carer is going to be.
Yeah. Importantly around this scheme as well is that it was initially attached to a means tested amount of $150,000 for essentially the primary carer or the mother in this case. What they've done now in terms of mean testing it is actually mean tested around household incomes of $350,000. So really it should
really expands it.
It really broadens it for a lot of households, and particularly for particularly for women that do earn more than their male partner.
It offers that flexibility for them to at least take the time off while the partner is becoming the primary carer.
Yeah, perfect.
All right, so let's move on into changes affecting business taxpayers. So there's only a few major tax measures announced for businesses. Some of the 2 biggest things is in regards to the skills and training boost and the technology investment boost. And they both operate the same way, they're just for different sort of sectors of spending. In regards to the skills and training boost, essentially you get an extra deduction for your expenses in regards to upskilling and training your staff. You get an extra 20% deduction for those costs. What that essentially means is if you spent $100 training your staff and upskilling them, you actually get a deduction for $120. So a bit of an extra, and give a bit of a boost to help upskill your clients, upskill your staff. So that is for basically that kicks on effectively from today, and for expenses claimed in this financial year, they will be deductible in the next financial year. They'll be claimed in the 2023 tax year. And then the next part is in regards to the technology investment boost. So the same principles apply. An additional deduction of 20% for costs going to moving into more of a digital space. That includes digital adoption services such as portable payment devices, upgrading to cloud subscription services, cybersecurity as
another
well.
one. Yep.
And it's capped out at 100,000. So basically, if you spend 100,000 upgrading into more of a digital space, you'll get a deduction for $120,000.
Yep.
Other than that, some of the major business grants and measures available is in regards to apprenticeships and trainings. And so really it's a retweaking of the current apprenticeship benefit system. So currently for businesses who take on apprentices, they get a bonus of up to 50% of the apprentice wages for the first year. Previously this was supposed to end actually tomorrow on the 31st of March. That has actually been extended to the end of June. And then going forward from the 1st of July, it's more of a tailored system where the benefit will be only about 10% of the wages in the first year and 5% in the second year, and then it's only for designated high priority industries. I'm not too sure what high priority industries are yet. They still need to clarify that.
One of the next areas that they looked at, which actually came as a bit of a surprise, look, superannuation got a bit of a light touch in this budget, which it does always tend to get a bit of a light touch leading into an election, superannuation. But they've basically extended the discount that was applied to the minimum drawdown required for allocated pensions. So people that are on allocated pensions that have been drawing out the minimum amount over the past 2 years because of COVID and the instability within the markets, the government's actually discounted the minimum amount required by 50%. That's essentially rolled over to another year. As far as the initiative, that one did come as a surprise. I was surprised they extended that one, David.
Yeah.
But yeah, as far as within the superannuation space, very, very light on.
Yeah, look, it's very light on from a business perspective as well. So it'll be interesting to see what happens, obviously, when we get on to the other side of the election. So that is our wrap up. It's probably one of the smallest budget wrap ups I've had to do in probably in the last 4 or 5 years. But I guess that means we're sort of rolling on with the punches now. So look, thanks everyone for your time. And if you want to find out anything more, you can reach myself at Judge Accountants on 4732 3844, and you can also reach Matt at Clarity Wealth.
Clarity Wealth, that's fine.
All right.